Okay, students, so that was offer for sale. And now, if you have studied this entire concepts clearly now, one doubt arises that what's the basic difference between offer for sale and sale? Hmm? Okay, let's take the same example in this way. Suppose, yeah, here. This is the example of offer for sale, just now what we understood. And now here, um, suppose there is a company, all right? Company issue the shares, suppose, to one person. Let's say my name is, I'm putting my name here, Mr. Chirag Khan. थोड़ा उसको ये कर दीजिए. Yeah, Chirag Khani, and company issued the shares to me. Total amount what I invested in the company was somewhere around 10 crore rupees. 10 crore रुपए मैंने यहाँ पे डाल दिया. Now after some times I wanted to sell the shares. Look, assume that it is unlisted company, and do you know what happens here? In unlisted company, the shares are not listed with the stock exchange. They are not in demat form. They are not in electronic form, and that's why the trading, sales or buy doesn't happen through clicks. We have to manually sell this. In manual shares, the biggest problem is finding the market. Buyers are not readily available, but we have to find them. Second biggest problem in manual share transfer is the valuation. In stock market, the price of the shares gets fluctuated based upon the demand and supply by manual shares. You have to go to one valuer authorized by central government. Precisely, most of the times you will find licensed chartered accountants. They will value the company's shares and will give you exactly idea that what should be the price of the shares. So I had invested somewhere around 10 crore rupees in the company, and now this is the time where I want to sell this. But as I just informed, these are the manual shares, not electronic shares, paper format shares. How would I find the buyer from the public? So obviously, in order to find the buyer from the public, I will advertise in the newspaper. I will say that this is the valuation, this is good company, this is the details of the company, and anyone who wants to invest in these kinds of companies, please contact me. I want to sell my shares to you. My shares to you. All right. So look, what is happening here? Company had issued shares to Mr. Chirag as being the individual shareholder, and now Mr. Chirag wants to sell these shares to buyer or the public, and for that he issued what? Advertisement. Now comparatively, if you look at these two examples here, this one and this one, the first question comes like, are these two same or different? क्या ये दोनों same examples है या different है? It almost looks similar. It almost looks similar. So fundamentally, you see here the company transfer the shares to SBI. Over here, company transfer the shares to Chirag Khani. In this example, SBI transferred the shares to public. Over here, Chirag is transferring the shares to the buyers who wants to take these shares. Over here, whatever advertisement document you issued, that is considered as deemed prospectus, and that's the question here. That any advertisement what is made by Mr. Chirag Khani in the newspaper, whether that advertisement is considered as deemed prospectus or not. यही समझना है बच्चा. Is it deemed prospectus or not? Alright. So first of all, see that are these two examples same or different? क्या ये same है या different है? Okay. So look, these two examples are totally different. How come? Look, the fundamental difference here is the issue house, State Bank of India, here is not acting in the individual capacity, independent capacity. Here, State Bank of India is acting on behalf of the company. And what are the evidences here? The first evidence is that SBI will pay company not at the time of contract immediately, But SBI will pay on the condition that if it gets the money from the public, then and only then SBI will pay to the company, otherwise not. And this procurement of money may take a lot of time. It may take, suppose, 1 month, 1 day, sometimes 3 months, 6 months, God knows how much time State Bank of India takes here. But this example, this transaction is totally different. Why? Here, Mr. Chirag Khani is not selling his shares to the public on behalf of the company. So, over here, State Bank of India is the agent of this company, representative of this company. But over here, Mr. Chirag is selling this for the sake of his needs. He wants to get the money, and that's why he's selling here. So fundamentally, that first transaction is considered as offer for sale. Understand, sir? And this transaction is considered as sale. It's not offer for sale, it's sale. So offer for sale means once an intermediary transfers the company's shares on behalf of the company as being the agent, as being the representative. In the sales, the shareholder is selling his shares sake of his own requirements, and the company has nothing to do with it. In fact, there is no any deal between company and the shareholder. In this example, Mr. Chirag, that company will give some commission if these shares got sold, or give some profit element if these shares got sold. No such arrangements, but over here you will definitely find such arrangement here. Okay. Now look at the biggest problem here. What if in this transaction, before I go ahead with these things, I want to clarify that Mr. Chirag Lakhani, when advertised in the newspaper, will it be considered as deemed prospectus or not? So answer to that question is no. That will not be considered as deemed prospectus. That will not be considered as deemed prospectus. Why? Company has nothing to do with this. That means if this advertisement in the newspaper contains any false information, company is not liable by that. Only Mr. Chirag is liable for that. I hope you are understanding this. ठीक है. Now one more question arises. Technically, we have come to know that if it is normal sale, then concept of deemed prospectus doesn't arise. Okay, let me put it like this. Here answer is no. It's not deemed prospectus. उसको हम deemed prospectus के तौर पे consider नहीं करेंगे. So sale means this advertisement is not deemed prospectus. Company's officers will not be punished for under section 447. But if it is offer for sale, that means some mediatory is selling these shares on behalf of the company, then any advertisement issued, it would be considered as deemed prospectus. I know very well. Most of you, what you are thinking, sir, once we have understood why you are repeating these things again and again, once we understood, now why are you doing this? Samjo. There's a big loophole is hidden here. You tell me, in the sale, no liability of prospectus, but in the offer for sale, there's a liability of the prospectus. So, as being the smart person, what you would like to consider this transaction as? Would you like to call this transaction as offer for sale or sale? उसके बारे में सोचिए. Today, if government officers are raiding, let's say State Bank of India or the company transactions, wants to treat this transaction as the offer for sale, but State Bank of India argues that, excuse me, officer, it's not offer for sale, it is sale. Company issued shares to me, and now I am selling this to public. Public is giving money to me, and I am giving to the company. It's not offer for sale. What if both of them are giving on affidavit that State Bank of India is not acting as the agent of company, and therefore this advertisement is not deemed prospectus, and therefore misleading information in this details in this document is not subject to section 447. If these kinds of game company and State Bank of India wants to play here, just for sake of example, is it valid or not? As being the government officers, how will you prove that it's offer for sale and not sale? I think you can understand the significance of considering this document as sales and offer for sale. What are the legal implications? I think you can understand it, right? Huh? Again, I want to repeat. If this is treated as sale, then liability under section 447 for misleading information doesn't arise. Just now we have explained. And if it is considered as offer for sale, company as well as uh, issue houses creditors are liable for that. But how will you prove it that ये sale है या offer for sale? कैसे साबित करोगे? Because SBI will always plead that it was not a offer for sale, it was just only sale. कैसे prove करोगे? One argument, if this you want to consider this offer for sale, तो उसको भी offer for sale consider करो. Huh? It's very difficult to prove, and that's why, guys, in the Companies Act 2013, while drafting the section 25 provision over here, because deemed prospectus concept is very well given under section 25, if you remember. ठीक है? Under section 25. देखो ये हमने यहाँ पे already बताया हुआ है. Section 25 deemed prospectus. In that section 25, they have provided how to identify offer for sale transactions. Because it's quite obvious that a company and such mediators don't like to admit that it's offer for sale, of course. Okay, so let's understand now those identification factors and the criterias. Government of India has believed that if it's investment, then what's the nature of investment? Generally, they found in from the books of accounts of any investor. Look, अगर आप invest करना चाहते हो किसी company में, then generally we don't easily sell those investment easily. That means generally investment is there for the long hold, maybe for 1 year, 2 years. Just like the mutual funds, we just pay there and we wait for 3 years, 5 years. We will see that what's the market cap, etc. I'm not talking about the speculation. I'm talking about investment. So investment क्या कहता है कि भाई, first of all, anyone who buys, psychologically he wants to go for longer hold. Okay, so the first criteria what they have considered is the longer hold. If anyone wants to buy the securities for the sale, to treat this as the investment, so generally he would hold the security. If it is really sale, he will hold it for the longer period. Second is, in the stock market, while if somebody is trading or anyone's parents is just engaged in this share market activities, he knows this very well that there is no credit period. Okay, payment must have to be issued immediately during that settlement period. Okay? So guys, another features of the sale or purchase of the securities is immediate payment. Immediate payment gets processed immediately. I have sold it immediately during the settlement days. I need payment in my bank account. Alright. Now, what government has made under section 25, they have provided that if government officers, by scrutinizing the records of these two entities, found that all the securities which had been transferred by company to issue house, let's State Bank of India here, and State Bank of India couldn't hold for the longer period. Let's say these things had been, all this security had been transferred by SBI to public just within the period of 6 months. Then there are solid grounds to believe that this is not sale, but this is what? Offer for sale. The officers may frame the charges on company for the offer for sale and treat this document as deemed prospectus. I hope you understand. Again, मैं बोलना चाहूँगा, company transferred SBI, but SBI just within the period of 6 months transferred all the shares to public. There are solid reasons to believe that this is not company to SBI transaction is not a sale but offer for sale. Alright, so let me tell you, bacha, if issue house transfers all the securities to public, within the period of 6 months. So that's the first belief what government wants to establish here, to consider this as what? Offer for sale. Okay? Second condition is given, it's based upon the payment. So here the word or. So let me tell you which is second condition what's provided here, it's not concurrent. ये दोनों concurrent नहीं है, simultaneous नहीं है. So if the government officers are finding these or this, either of the situations, in the books of accounts of the company or issue house, they have solid grounds to believe that it's offered for sale. What's the second condition? Okay, if all of the consideration is not paid. Look, in generally offer for sale, what kind of transactions we are looking at? Here, company has transferred all the securities to issue house, and issue house will slowly transfer to public. Public will slowly pay the money to State Bank of India, and State Bank of India will release the payment in favor of company, and later on commission calculation. This is how the entire cycle works. That means if company transfers all the securities to SBI, immediate payment doesn't happen. That's what makes this transaction offer for sale. So government instructed that wherever you find such a situation where securities are transferred but whole of the consideration is not paid, consider and treat this transaction as offer for sale and make unfriendly accusations in this. Now, analyze this provision of section 25. Government says that under these two conditions, either this or this, government will believe that it is offered for sale. And if company wants to excuse this, if it wants to raise the objection against this belief, then company needs to prove that it is not offered for sale. If company failed to believe that, if company failed to prove that, then government will consider this offer for sale, and this advertisement will be considered as what? Deemed prospectus. And you have to be ready for the consequences as mentioned under section 447. Yeah. This question sometimes they ask in CA Inter exam that under what circumstances the government would believe that the transaction taken place between the two parties, like company to the other one, is not sale but offer for sale. So what are the grounds to prove for offer for sale? So you have to mention these 2 points there. Okay, Bacha? If you just refer the material what I have given, let me just show you here. Section 25, because some of you are just asking for where it is written and where it is mentioned. So this is what is the entire definition of section 25. Look at some words like issuing houses here, and where are those 2 conditions? Let me say, yeah. Look, what section 25 subsection 2 provides, it says that unless the contrary is proved, so until the company proves its innocence, an allotment of or agreement to allot shares or debentures shall be deemed to have been made with a view to the shares or debentures being offered for sale. If it is shown from the books of accounts, either of these 2 situations, that the offer of the shares or debentures for sale to the public was made within 6 months after the allotment or agreement. So company allotted all the shares to issue house, and issue house just within the months of 6 months transferred to the public. So government officers would believe that it's what? It's what, brother? Offer for sale. Second condition written that at the date when the offer was made, the whole consideration to be received by the company in respect of the shares or the debentures had not been received by it. That means, guys, on the agreement, full payment was not received. If the payment is receiving on the later stage or on the gradual basis, recurring basis, okay, then it's offer for sale. And company must have to prove that it's not, if they want to raise the objection. So guys, that is the beautiful concept about the deemed prospectus. So what we have learned so far, 2 concepts, that what is offer for sale, and under what circumstances this offer document or the advertisement document would be considered as deemed prospectus, and what's the difference between offer for sale and sale, and under section 25 subsection 2 how the government would differentiate offer for sale from the sale, and for that we have these two conditions. Okay, so after deemed prospectus, let's now learn about one more concept. It is provided under section 27, and section 27 speaks about that what if the object of prospectus is changed after collecting subscription amount. Okay, so technically question goes like this. Suppose there is a company and this company issued a prospectus telling to the public that money what they are going to get, suppose the total money what they want to raise is somewhere around 1,000 crores. Now objective of prospectus is to use this money to build up the food business, that means the restaurants, and people know about this company and they have invested in lot. This subscription is completely subscribed by the people, public. But now what happens that after collecting the money, company realizes that there's a good scope in the market for hotels and other businesses. So instead of using this 1,000 crore rupees for the restaurant or food business, now company wants to use this for hotel construction and the hotel management. The question comes like, can company do this or not? Some of you may be thinking what's wrong in that, because ultimately it is the board of directors decision. If in the board meeting directors agreeing to this decision, then there shouldn't have any problem. That's what might be your thinking. But you imagine that you are the shareholder, company told you that I'm going to use this money for the restaurant business, and you invested in the company believing that money would be used the way it is committed and promised by the company. But later on, what do you find, what you discover, that instead of using that money for the desired objectives, what was communicated and committed, company wants to use this for some other purposes, for some other reasons. How would you feel on that? Obviously, it would be a bit disappointing, and some of the members or the shareholders may think it is like cheating or the fraud, breach of commitment by the company. It's quite obvious. So law also considered this matter very seriously, and they thought that money collected from public should be used for the objectives what is communicated to them, what was committed to them in the prospectus. So technically speaking, guys, company law provides that this money so collected is not allowed to be used for any other purpose except the objectives what are communicated to the shareholders in prospectus. And if company wants to do that, then it must have to comply certain conditions. All right. So this was the question. Company in the prospectus, they wanted to go for restaurants, but after collecting money, let me complete the question here. After collecting money, it decides to use the money for what? To use the money for hotel management business. For hotel management business. And the question comes like whether company can do so or not. So just now we have discussed, yes, changing the objectives for the utilization of the funds is allowed provided company follows certain conditions. Now what are those conditions? Company has prescribed that First of all, company has to pass a special resolution. And all we know, guys, special resolution means what? You have to gather shareholders at a general meeting. You have to raise this proposal there, and you have to discuss that this is what company is planning to go for. And if at least 75% of the people agree to this new decision, then company may definitely go ahead with this. So the first condition here is company must have to pass special resolution. Now here the question comes like, what about those shareholders who do not agree to this decision? It's quite obvious that when the voting was demanded, all of them would vote in this favor. It's possible that all of them may not. Fine. So there may be some people who are dissenting this decision, who are not agreeing to this decision. What for them? So here law has provided for them, so dissented shareholders must be given what? Exit option. Exit option. Exit option means what? You have to communicate them that this is what we have planned and this is what we are going to do with all those shareholders who do not agree to this decision. They can take their money back. They can take their money back. So that's called the exit option. But how would you give the exit option? Law has prescribed that this option would be given by way of communication to the shareholders. How will you communicate? You will communicate by way of publishing an advertisement in newspaper. Obviously, it should be the well-known reputed newspaper where the registered office of the company is situated. And if the company has website, this information must be published on the website as well, that this is what the company's decision, and dissenting shareholders may apply. Okay, some of you may be asking that if dissenting shareholders are applying, then at what price the surrender would be accepted? Will it be market price? Look, market price may be more or less. And therefore, in order to avoid the ambiguity, the law has prescribed it would be the same amount what was taken by the company. So when I use the word same amount, it means it what? Not only face value, it would be along with premium. So face value plus whatever premium was collected by the company, that will be paid back. While I discuss this point among the students, few of them do have this doubt that but the company needs to pay the interest on this repayment, on this exit option. So answer is, as such, the law doesn't provide such provisions, and therefore, as there is no any exclusive provision regarding this, company no need to pay any interest on this. So that was about the object change after receiving the money from the public and how the option goes. Contents of this point, I request all of you to just read from the material as prescribed there. Now the next point is about section 28. Now what is section 28 is talking about? Look at here. Section 28 again, the same word what we discussed in section 25, offer for sale, is discussing. It is the offer for sale by certain members. Offer for, okay, let me put it this way. Here it goes like this. Yeah. Offer for sale by certain members. Section 28. Look, whenever I gave these points to the students, that you read it and just try to interpret what it tries to say, that a lot of students are facing confusion that what exactly written in the paragraph. Okay, let's try to read first of all that what it is trying to say, and then we will interpret this. It is mentioned that where certain members of a company propose in consultation with the board of directors to offer whole or part of their holding of shares to the public, they shall collectively authorize the company to take all actions in respect of offer of sale for and on their behalf, They shall reimburse the company all expenses incurred by each on this matter. Section 28 in this regard provides that any document by which the offer of sale to the public is made shall for all the purpose be deemed to be prospectus issued by the company, and all laws and rules made thereunder as to the countries of prospectors and as to the liability shall be as it is applicable. So these two paragraphs are dedicated to section 28. Okay, we have discussed what it tries to say. What it tries to say. Fine. Okay, just in order to understand this section 28, first of all, let's differentiate these two types of stock tradings. First of all, what if your company shares are listed in the stock market? And second is, what if your company shares are not listed? They are actually manual shares, paper-based shares. Look, if company shares are not listed in the stock market, then already I have discussed that shareholders faces these two kinds of problems. The first problem is valuation of the shares. At what price the shares would be sold to the buyer, and the second point is how to find the buyers. In order to find the buyers, the most appropriate method is like you have to advertise in the newspaper. Anyone who's interested to buy your company shares may contact you, but sometimes the possibility or probabilities is very less. So such desperate and disappointed shareholders, how would they be able to sell their shares? कैसे करेंगे? Valuation का पता नहीं है. Who are the buyers? How to contact them? We do not know. Alright. Answer one question. The contacts and the network of the company and contacts and the network of the shareholder, whose network is broader or wider? Company versus individual shareholder having a very limited shares. Okay. In most of the cases, it is company. Most of the cases, company's contacts and network is wide as compared to. So, if individual shareholder is advertising in the newspaper that I want to sell my shares of my company, that is more impactful. Or when company advertises to the public that I want to sell my shareholder shares, please help me, that is more impactful. Just think once, logically, which advertisement would be more impactful? Alright? So it's quite obvious that when company advertises on behalf of its shareholders that my shareholders, some of the shares are pending to be sold, so I request you that anybody who's interested may apply to the company and we will get it transferred from existing shareholders to you. It would be more impactful. So what Section 28 is allowing here, it is allowing this facility that some members, whether body corporate or some group of members, when they want to transfer their shares, instead of trying this individually, they can request the company. Request the company. Obviously, request the company means you have to request to the board of directors, stating that let's say you have somewhere around 15% of the shares, or the 25% of the shares, and you want to sell this, and enforce the company that a company should advertise on members' behalf because it's more impactful. There are high chances that people will respond. So when on the request of the members, company itself is offering shareholders shares, members shares to the people, this concept is known as offer for sale by certain members through the company. So you see basically what kind of hierarchy is coming. First of all, the members is there, member will request the company, and then company will advertise and request the public that please come and take the shares of my shareholders. Obviously, it will require to incur a certain amount of expenses, but Section 28 clearly provides that those expenses would be reimbursed. Would be reimbursed by, would be recovered by company from the members. So whatever reasonable expenses are incurred by the company, members must have to pay the fees for that. Now, what is the relation of this concept and prospectus? Obviously, in order to convince the public, company will issue certain advertisements in the newspaper, of course, containing all the details of the company's past, the company's present, and company's future projections. The point is whether those advertisements are prospectus or not. That's the question. That's the question. And answer already is given. If you read this paragraph number 2, it is clearly provided here that in this regard, it provides that any document by which the offer of sale to the public is made shall for all the purpose be deemed to be a prospectus. That would be considered as a prospectus. उसे prospectus माना जाएगा. It will be considered as prospectus. So of course, guys, under Section 28, all these advertisements which takes place by the company are considered as deemed prospectus. So again, guys, we encountered, we faced the concept of deemed prospectus. Earlier we had under Section 25 and the other one is Section 28. So now after having this explanation, if you just now try to read these 3 paragraphs, it would be very much easy for you to understand that what exactly Section 28 is trying to say here. Alright, I hope it's clear for everyone. Okay students, now let's understand another concept. After learning this beautiful concept of Section 28, and now we are learning that what are the liabilities for material misstatement in the prospectus. Now, liabilities for material misstatement in the prospectus. What topics we are going to learn in this? So first, I think we have to understand that what do you mean by material misstatement? Meaning. Once meaning is done, yes, meaning is completed, we are going to understand the liabilities. And liabilities have been categorized into these many heads. The first one what we have, it is liability mentioned under Section 34. Section 34 speaks about criminal liability. After then we have another one, that is the Section 35, which speaks about civil liability. After then Section 36, liability in case of fraud, and Section 37 here, which speaks about class action. Okay, so liability, Section 34 criminal liability, Section 35 civil liability, liability in case of fraud. Section 37 speaks about class action, and after then the last topic we are going to understand and face is, I would say, defenses available against such liabilities. Defense available against such liabilities. These many topics we are going to pursue for. Okay, so let's begin with the first point over here, material misstatement. Material misstatement. Technically, there are two words. The first one is, as you can check it, it's material. What do you mean by the term material here? And the second point is misstatement. Misstatement. Okay. Misstatement. Now, law says the liability arises when there is material misstatement. Both these conditions must be fulfilled if you want to claim the liability under this topic. That means if it is misstatement but it is not material, you can not claim the liability over here. Something is material but not misstatement, then you cannot claim the liability. One more point I would like to add here, what I have not stated, it is that who can get the relief in case of material misstatement. So of course that concept is also very much, I would say, wide and important. Who can claim the relief under this point? Okay. So चलिए समझते हैं उसको. Misstatement. What do you mean by misstatement here? Misstatement can be categorized further into these three parts. First of all is falsification of the fact. Falsification of the facts. So certain facts are falsely stated. For example, in the prospectus, it was written that company's net profit consistently company has achieved the net profit of 2 crore rupees per month. 2 crore rupees per month. That means somewhere around 2 into 12 comes to 24 CR per annum. That fact is given in the company's prospectus, but when we check the reality, it's found that the company's profit is not 24 CR, it is just around 4 CR per annum. Just to impress the shareholders, company lied there. So this example is falsification of the facts. Second is sometimes facts are there, they are true also, but they are suppressed or incomplete. That means suppression of fact is also considered as misstatement. For example, you have stated that our company has 5 directors and all of them do have 10 years of experience in the corporate world. Okay, fine, you have correctly written. You have correctly mentioned that. But you did not mention that out of this 10 years, 3 years of experience, it's not of directorship, but it was just for normal, I would say, chief accountant or some other employment. So obviously they have 10 years of experience, but not as a director, but just as 3 years is just as the accountant or non-director. That fact you have suppressed, I would say, in fact you have concealed that. So fact you have written, but you have not given the complete facts, then that is also known as misstatement. Now, just one of the extension of the suppression of the fact I would like to take is, and that is the incomplete truth. That is also considered as incomplete truth. That's also considered as what? Material misstatement. कभी कभार सच्चाई को छुपाना भी misstatement माना जाता है. And there is a case goes like this. Suppose the company in the prospectus has mentioned in the prospectus has mentioned that since last 5 years, company is consistent to pay 20% dividend per annum. So every year company has paid 20% on an average dividend to its shareholders per annum. This fact is mentioned in the prospectus, and this is perfectly fine. Yes, if you even check the reality, we can find that yes, company was regular to pay 20% of dividend. But when we check the fact, we found that this fact is incomplete. Why? Company has paid 20% but not out of revenue. Actual fact was it was out of capital profit. It was out of what? Capital profit. This fact somehow company intentionally or unintentionally didn't disclose to the people. Now you tell me, Bacha, that whether is this incomplete truth or not. Now why I'm saying like this, you see, whenever we see the word 20% of dividend, what impression comes in our mind? Okay, first of all, dividend means what? Okay, many of you may be thinking the dividend is consist of the one word. It's just one word, but actually it's not. Dividend word is comprised of the two different words. The first one is divide, and second is the end. Divide the end. That's called the dividend. Now, what kinds of end we want to divide here? So when company makes any sales, from the sales, when you reduce or deduct all the purchases, then you get what? Gross profit. From the gross profit, when company deducts all the expenses, then company gets what? Net profit. From the net profit, if company deducts all the kinds of appropriation in the sense like all those adjustments, transfer to provisions, transfer to reserves, etc., all those reserves, whatever is left at the end, left over end, that profit is available for distribution, and therefore sometimes it's also known as distributable profit. And out of this distributable profit, whatever is distributed, whatever actually is paid, that is known as dividend. I hope this theory everyone knows here. What exactly the meaning of dividend is. So whatever is left at the end, out of them, whatever you distribute among the shareholders, that's known as dividend. उसी को ही तो dividend कहा जाता है. Even if you refer to section 123, it provides that dividend must have to be paid out of profit only, either current year or any previous year's profit, but it should be paid out of profit. So by referring to this entire theory, when we come to this statement that company has consistently paid dividend at the rate of 20%, what first impression comes in our mind is like, okay, company is very good in operations, and it has good profit in the profit and loss account, and therefore they have paid 20% of dividend. We believe that this dividend has been paid out of revenue profit. Out of revenue profit. And you know what? What revenue profit actually discloses? What it reflects? Revenue profit means you have operating profit. Operating profit means you have earned the profit out of your operations. It means company has some operations like a sales, production, very regular purchase, etc. That means company is performing. That kind of impression comes in our mind when we see this 20% of dividend paid out of revenue. But if this fact was concealed, that it was paid out of capital profit, now what's the definition of capital profit? Let's have just look into that. Suppose company has 10 crore rupees building. 10 crore rupees building. Later on the same 10 crore rupees building, company sales for 30 crores. 10 crore rupees building, company sales for 30 crores. So here company has earned the profit of 20 crores. Now I want to tell you that this 20 crores, it's just luck by chance. It's just a coincidence. Why? You bought one building, and this all of a sudden, due to certain external market forces, demand and supply, the valuation of this 10 crores went up, and now it is 30 crores, and accidentally you have earned the profit of 20 crores just because of their high valuation. So this 20 crores doesn't indicate your good performance. It is just a luck by chance. You know, एक अच्छी जगह पे जमीन लिया था, भाव बढ़ गए, तो you earn the profit of 20 crores. What I'm trying to say, that this was out of capital profit. And if it is capital profit, if this word is written that a dividend had been paid out of capital profit, obviously one doubt arises that company is not performing well. Company doesn't have good operations. If company had operations, then there was no need to pay dividend out of the capital. They could go for the revenue. All right, and our investment decision could be different. And it's quite obvious that no one likes to invest in the company which is not performing, which operations are not good, right? But in this fact was suppressed. It was incomplete. They have provided the fact, but that was incomplete. And just because of that, guys, it may mislead the investors to invest. This is also misstatement. This is also misstatement. Okay? So let me be very clear here. Whenever we discuss about this concept called what is misstatement, we just do not consider, I would say, the falsification of the facts, but at the same time, we also consider the suppression of fact. We also consider here incomplete truth, and we have studied the examples regarding that. But you see, not only misstatement alone doesn't make the offense. Misstatement alone doesn't make the offense. For example, if my name is Chirag right now, I am the director in the company, and by mistake, company misquoted me in the prospectus. Instead of Chirag, due to printing error, my name is printed as Mr. Mirag. It's quite possible. हो सकता है भाई. Because C and M, both of those letters are coming in the same row. So it's possible. So Chirag may be printed as Mirag by mistake. So is it misstatement? Obviously, yes, it's misstatement. But does it mean that company is liable to pay you the penalties? Just because of this small error, with the company is liable under section 34, 35, 36, and 37? Answer is no. Why? Law has also provided that there shouldn't be only misstatement. Misstatement should be material. Okay. Now some of you want to know that what do you mean by the term called the material. Let's understand about this. Look, the simple meaning of material here is significance. Or rather, I would say significant. Significant. Okay, just a second. Yeah. The meaning of material here is what? Significant. Now, what do you mean by the term called significant? Significant means valuable. Valuable. Generally, these kinds of terms are very hard to define. Very hard to define. Unfortunately, when you read the entire corporate law, nowhere it's written or mentioned that what's exactly the definition of material. Uski definition kya hai? Material means what? But when we study auditing, in auditing there is one standard on auditing named SA 320, materiality. Over there, one explanation is given that any information, any disclosure or non-disclosure of which can affect the decision of reader, can impact the decision of reader, then such item is considered as material in nature. So that's disclosure or non-disclosure of those information may impact my decision to invest or not to invest, then that is known as what? Material to me. For example, you see, here just the word 20% dividend is mentioned. But if it was written the capital out of capital profit, then my decision could be different, my thought process could be different, the entire logic I have explained. So over here, if this 20% dividend is affecting my decision to invest in this company, this information is material for me. This information is significant for me. One more point I would like to add here, that please don't think that certain information which is material for you, the same may be material for me as well. The concept of materiality is subjective. Person to person, the significance changes. In order to understand this concept, let me ask you one logical question. And the question is a bit weird. Okay. I ask you that what is the value of, listen to this, what is the value of rupees 10 note? 10 rupees currency note, what's the value of that? I know you will find it very weird और आप ये भी सोच रहे हैं ये किस type का question है. And some of you, your answer is like, okay, 10 rupees value is 10 rupees. What kind of stupid question it is? But actually it's not. Look, it depends that this 10 rupees question I'm raising in front of whom. You just take in this way that if this 10 rupees, what I'm talking here, it was gifted by my grandpa who passed away a few years back. And that was, I would say, the last a memory of my grandpa, that on my last birthday when I was little, he gifted me this 10 rupees. And I liked that feeling so much that I didn't use that so far. I kept in my wallet and I never used this, but somehow it got lost from me. This 10 rupees is just not a 10 rupee for me. It contains a lot of emotions for me. So it's quite possible that if this 10 rupees note gets lost somehow by me, I may agree to pay even thousands of rupees to get it found. Possible or not? So value of this 10 rupees note may be just a 10 rupees for you. For this, it is just a 10 rupees simple note. But for me, it is very significant. It's very material. It's very material. While we study standard on auditing 320, what this auditing standard talks about. Sometimes when we go for the company audit, we find a lot of general heads. General heads means like other assets, other expenses, other income, other receipts, miscellaneous expenses, etc. Such general heads we sometimes find. Standard on auditing says that you have to assess these general heads very carefully, because sometimes these general heads may contain a very sensitive information which is very much material or important for the reader. And if it's really very much material or significant for the reader, it should be separately disclosed. It should not be added with the general head. So every auditor who goes to the client place must have to take the profit and loss account and the balance sheet and just try to identify the general heads and go in each and every transaction of the general head and try to identify that whether is there any significant information hidden under the general head. And if answer is yes, he will try to convince the management that such items must be separately disclosed. It should not be added with the same one. Let's understand this material item concept by this example. Okay. Suppose I have this profit and loss account for your kind information. Yeah. Suppose this is my profit and loss account here. Okay. भाई ये हमारा प्रॉफिट एंड लॉस अकाउंट रेडी है. Okay, this is income side and suppose this is expenses side. Income and expenses. Now here it is mentioned and written that other revenue. It is somewhere around 700 crores. Okay, rupees in the crores is written here. 700 crores. 700 crores. And net profit showing over here is after deducting all the expenses. Okay, net profit showing over here is suppose 200 crores. Again, I want to draw your attention that this entire thing is in crores. Yeah. Now, if I ask you on the basis of the revenue, you tell me, is it a good company or not? So, what you will start calculating, okay, it is 200. So, 200 divided by 700. 200 divided by 700. So 200 divided by 700, it is coming, I would say, somewhere around 28.57% net profit it is generating, which is a good return. Out of total 700 crore rupees, net profit is 200, so 28.57. Somewhere around 29% of the total return the company is generating out of the revenue. So obviously our approach towards such company is quite positive, and we may want to invest in such company. But what if I reveal the fact? What if I reveal the fact that out of this 700 crores, 500 crores is nothing but government grant? Government grant. Now let me tell you, government grant means what? This is the exceptional item. Exceptional item means company is not going to earn this every year. Every year. So this should be considered as God's grace, God's blessings, government's blessings, and not as being the part of our performance. So out of this 700 crores, if the 500 crores is the government grant, that means actual performance of the company is just only 200 crores. So 200 crores is nothing but the operating revenue. The actual performance made by the company. Real performance made by the company. And if I look at this 200 crore rupees net profit, this 200 figure is coming just because this 500 rupees grant is added over here, which is not going to happen every year. So if I remove this I would say 500 crores from my regular performance, then my actual net profit is coming down to minus 300. Now just think about, guys, disclosure, separate disclosure of this 500 crore rupees will make the difference or not on your decision making. क्या आपके डिसीजन पे इसका कोई इम्पैक्ट आएगा नहीं आएगा? हाँ, आंसर इज ऑब्वियसली यस, इट विल क्रिएट द इम्पैक्ट. इम्पैक्ट आएगा ही आएगा. So this information which was concealed under the general head is very, very material for the reader if you are really focusing to this net profit concept. Again, I want to tell you guys, the concept of materiality here is very, very subjective. Subjective means I want to say like this, that certain information what is significant for me, it may not be significant for you. So it depends that while making the investment decision, what factors I have considered seriously. All those factors what I consider seriously will be recognized as the material factors for me. And all those which I didn't consider to make my purchase decisions, to investment decisions, are not material for me. So as being advocate, when any matter arises to the court, that whether company is liable for section 34, 35, 36 or not, first thing the advocate needs to prove on behalf of the client is it was material misstatement for him. Because it's quite possible that something what is material for me may not be for you. तो वो चीज आपको सबसे पहले साबित करना होगा. I hope you have understood just one concept of that what is material misstatement and how far we can go for that. Okay, now we are moving towards the liabilities. So now we are moving towards the liabilities. All right. Now, what do you mean by liabilities? So, Section 34 speaks about the criminal liability. Section 35 speaks about the civil liability and liability for fraud. Technically speaking, who would be liable? So, in our previous sessions, if you know, we have already discussed that in case the prospectus contains any material misstatement, then all those promoters, directors, and the experts who wrongly certified certain declarations in the prospectus would be held liable, and the liability may be criminal liability, civil liability. Okay, now what is the difference between criminal liability and civil liability? Look, while we study the law, where you find such provision where default of which lead the defaulter or culprit to face the punishment like penalty or imprisonment or both, fine or imprisonment or both, then such kinds of liability is considered as criminal liability. As we see into students in the chapter of Negotiable Instruments Act 1881, you are going to learn one concept called the criminal liability in case of dishonor of check. Section 138 in the Negotiable Instruments Act 1881 clearly provides that if a company has issued a check and later on stages if it doesn't keep the sufficient balance there, then person may face the imprisonment up to 2 years or the fine which can be maximum up to the twice of the amount of the check or both. So in this entire Negotiable Instruments Act 1881, section 138 precisely is considered as what? Criminal liability. So criminal liability in most of the cases the culprit would face the imprisonment punishment. So what section 34 says that if material misstatement is detected in the prospectus, then responsible directors, responsible promoters, responsible experts would face the liability under section 34, which says that liability would be the punishment as mentioned under section 447. Oh, क्या हुआ? अरे हाँ. As mentioned under section 447. Now all of you know that what is section 447 and what it is trying to say. 447 is the punishment for the fraud. Just in our earlier session I explained that 447 is the punishment for the fraud where maximum imprisonment can be extended up to 10 years and minimum may be 3 years or 6 months. If public at large is involved, then minimum 3 years. If it's not involved or not affected, then just to 6 months. That's what we learned. So criminal liability would be the punishment as mentioned under section 447. Now, what is civil liability? What is civil liability? When I speak about civil liability, the offense, you don't need to go to jail or you don't need to pay any fine, but because of your default, whatever loss is caused to the other party, that much losses and the damages you have to compensate. So wherever you find such provisions where the defaulting one needs to pay certain damages to the other party or other person, then these kinds of liability is considered as civil liability. For example, in the Indian Contract Act 1872, what we learn in CA Foundation, that breach of the contract makes the defaulting party to compensate the other party. For that, he doesn't need to go for jail, just to compensate him for the breach of commitments. And therefore, technically, we can say that the Indian Contract Act 1872, it's not criminal law, but it's civil law. It's civil law. Okay, so what it is trying to say? That suppose because of this material misstatement, if any government agency, just like the GST department, income tax department, registrar of companies, SEBI, faced certain losses because of your misbehavior, because of your wrongful information. If any creditor faced some losses, if investor faced certain losses, if banks faced certain losses, it is not limited to only creditors or the lenders, it is actually affecting everyone, including customers as well. If they are affected, so whatever loss is caused to them, responsible officers must have to compensate. That's what section 35 is trying to say. Now section 36, that intentionally you propagated your prospectus to the people, you know this very well that whatever you are mentioning there, it's utter lies, but still you are not stopping them. In fact, you are letting them to be published. So actually you're making the fraud with the people. So law says you will be punishable as per the punishment mentioned under section, as you can check it under section 447. 447. So liability would be announced under section 36, but the level of punishment would be given as it is mentioned under section 447. So while understanding guys the chapter of prospectus, the provision or the section of 447 is very very important. वो काफी बेहद बढ़िया तरीके से आपको ध्यान में रखना है. Okay, so I hope all of you clear with the section 34, 35 and 36. Now question arises that what is this section 37? ये section 37 क्या है? Which is speaking about class action. So let me tell you that few years back there were certain controversy actually happening in this country regarding somebody complained that Maggie noodles was detected and found with certain hazardous ingredients in its product. And whenever this news outbroke in news media, there were a lot of people, NGOs, volunteers or voluntary associations filed complaint against Maggie. Assume that across the country more than 12 complaints are filed. Think that issue is only one. Maggie contains some hazardous ingredients, excessive lead, not good for the human consumption. But 12 complaints filed across the country. Now trials on these 12 complaints are going separately for those 12 places in the 12 different states, suppose. Then can you imagine for the same issue, 12 courtrooms of this country are occupied, 12 judges of this country are occupied, 12 police investigations would take place on the same matter. So Maggie like company would get feel like a harass because on the same matter 12 different police are interrogating them. So what's the option for this? Because it seems like it's a waste of time, waste of resources for the government. In this scenario, what government does is government will merge all the 12 complaints and will make it as one, and the trial would be allowed to be conducted at some high court or some session court, obviously, and that decision would be taken by the court only. Court will decide that instead of running these matters to the 12 different places, let it get run on just one particular high court places. So all the 12 complaints got classified, I would say, merged together, and one single trial was allowed to be done. So no 12 different resources, no 12 different courts, no 12 different uh, judges are occupied in that matter. Same way, if company is making the fraud, suppose by way of providing false information in prospectus, material misstatement in prospectus. So law says that instead of filing, the complaint individually from the different states of the country, it would be better if the shareholders are just getting together. They are forming the class. Class means the people who are victimized because of this misstatement in the prospectus. And if they file one single complaint at any police station or at any court, then hearing of this matter would be considered as the hearing on behalf of all those dissatisfied shareholders. So the biggest question comes like that in the Companies Act 2013, is it possible that now for the multiple complaints for the same issue, instead of filing the different complaints, can shareholders get together and can they file only one single complaint to the court? So answer to that question is absolutely yes. Now it's available. Which section empowers that? Section 37. Unfortunately, when I studied the Companies Act 1956, I couldn't get this kinds of beautiful facility there, and therefore for one default or for I would say one issue or the one matter, if many of the shareholders were affected, they had to file the separate complaints, and all those complaints would be separately heard until and unless one higher court merges them. But now because of this section 37, you don't need to wait for the court's order. even voluntarily by forming one small class or the association, directly you can file the complaint against the company or the company's officers. So that is also section 37. All right. Now, from this liabilities topics, one of the very much, I would say, the particular questions what repeatedly they are asking in exam is this part. What are the defenses available against such liabilities? Liabilities. Okay. Before I start the concept of defenses, you clear one thing in your mind that in case of material misstatement, who is going to face the liabilities? Again, I want to repeat, they are directors, promoters, and experts. And they may face the trial on them, and maximum imprisonment they may face is up to 10 years. 10 सालों तक जेल में जा सकते हैं वो लोग. But you see, some of them are pleading that they're innocent and they don't deserve to go for this 10 years of jail under section 447. And that's what my question, my dear friends, that if they plead that they are not guilty, how will they plead it? Like what kinds of defenses they will set up before the court so that court can consider them as non-guilty? How would they set up the defenses there? What arguments are available for them? What excuses they can make to the court to plead non-guilty in exam, in the courtroom? So these kinds of questions they can ask that what defenses are available to directors, what defenses are available to experts, and we have to write about that. ठीक है, तो थोड़ा प्रैक्टिकली समझ लेते हैं. Suppose I am the director or I am the expert. So look, without my written consent, my names cannot be appeared in the prospectus. So if you want to have my name over there, you have to take my written consent first of all. And if I am the expert, then my certifications will be there, my declaration will be there. Are you already given to you? Now suddenly, just a few days before the publication, I came to know that mar gaye. Why? I found that certain facts were falsified, certain facts were manipulated and presented in front of me in such a way that I could believe that yes, it's the truth, but actually it's not. In this situation, आपको क्या करना चाहिए? So whenever you come to know that certain information went wrong and falsely your consent is taken on that, what you should do is you should write a letter to the company and you should withdraw your consent. You should write a letter and get it, stamped by the company affirming that yes, you have withdrawn your consent. And now, if later on prospectus is issued and your name is there, and some people believed in this and they invested in the company and they faced some losses, and they filed a complaint against all the directors, all the experts along with you, this one document can save your life. By showing this one document, you can argue to the court stating that, sir, my lord, you look at the moment when I came to know that there is something fishy in the prospectus, I withdrew my consent and therefore I am not guilty there. So कहते हैं ना, one small document can save our life. That's the example. Okay. Now second stage here is, what if the document is already submitted to ROC or SEBI? Now mere withdrawal letter is not sufficient. Now submission has already been made to the ROC. In this situation, you should write the two letters. The first one is to the company. Tell them that I'm withdrawing my consent. And second, you should write to SEBI and ROC, stating that before approving this prospectus, you please consider that now my name, what's appearing there, I have withdrawn my consent. So please don't consider me for those declarations, for those written consents, for those certifications. Now I'm not there. You have to write to the ROC. Okay? So stage by stage, आप समझो. Prospectus is just prepared but not submitted to ROC. Just write a letter to the company and withdraw your consent. If prospectus is already reached to ROC or the SEBI, write a letter to SEBI and ROC and state them, I have withdrawn my consent. But now the third very horrible situation. What if the prospectus is already approved by ROC and SEBI and it is already issued to the public as well? Now what you should do? So let me tell you, bacha, that very much at first day, when you realize that something is wrong and your consent is wrongly taken, your signatures are wrongly taken by manipulating the facts to you, what you should do is, along with notifying the same to company, you should also advertise this fact in the newspaper as a public notice, arguing that while considering the prospectus issue, don't consider my names as a director, as a promoter, or as an expert. That one newspaper public notice can save your life, and they can save you from the liability of Section 447. Section 447. So I hope it's clear. If it is not issued to ROC yet, just simple write a letter to company and withdraw your consent. If it is already given to ROC and SEBI, write a letter over there as well. But if it is already issued to the public, then give the public notice by way of advertising in the newspaper stating that I'm no more part of this. Okay? Now, these are the three defenses. Let's learn about now the fourth one. What if you have not written a letter to the company, you have not written a letter to the SEBI, even you failed to publish the advertisement in newspaper? Now what you should do? Now prove in the court that the misstatement is not material. Because when you are liable, just misstatement doesn't hold you liable under section 447 or 34, 35, 36. It can hold you liable only in the case when it is material misstatement. So next आपको क्या prove करना है? You prove like this that misstatement what you have signed, the wrong certifications what you have signed, it was not material. It was immaterial, non-material. Then maybe government, I think, or the court may just to show some sympathy and may grant the relief on that basis. The last remedy over here is you prove in the court. अब आपको क्या prove करना है? You please prove in the court stating that information and the facts had been manipulated in such a way so that anyone could believe that it's not a material misstatement. Company was so smart that they manipulated and changed the data in such a way that anyone, not only me, but anyone who was reading this information or the documents could believe that yes, this is the significant and correct information. So anybody could carry it away in this kinds of state. If you prove that you have reacted the way anyone could have reacted in those situations, then you may be given the grants from section 34, 35 or 36. So guys, if any question comes in your exam regarding what are the defenses available to escape from the liability under section 34, 35 or 36, from the liabilities of the material misstatement, then what defenses you can set up. So you have to write this 5. Withdraw your consent by writing a letter to the company. Second, inform to RC that I'm going to withdraw this. Please don't consider me while approving this. Third, if it is already issued to the public, advertise in the newspaper stating that I'm no more part of this. Prove that misstatement was not material, or prove that anybody could believe the way you believed when the facts were presented before you. So these 5 defenses you can very much apply whenever there is case against you under section 34, 35 or 36. Okay, so now we are moving towards the last point of the liabilities for the material misstatement in prospectus, and that one is like who can get the relief in case there is material misstatement in the prospectus. So many of you may be thinking, of course, all those who are the victim of this material misstatement impact, they can definitely claim the relief over here. But that's not like this. Just a mere you are the victim of the concept doesn't make you to grant or to claim the relief here. Apart from that, you have to comply some more conditions. Okay, let's take a question like this. Suppose there is a company, for example, I'm taking here TCS Limited, and this TCS Limited has issued, let's say the FPO or IPO, let's say IPO for rupees uh, for 400 crores. Okay, and you all know very well that any company when wants to issue the IPO, it must have to issue prospectus also. So prospectus is also issued here. Prospectus is also issued here. Now there was one person, let's say here Mr. Aditya, he wanted to invest somewhere around 10 lakhs rupees in this company. He was thinking, he analyzed the prospectus, he read a lot of information, but somehow his application got rejected here. Application gets rejected. Application gets rejected. Now the question arises is, he was so much desperate to buy this company shares that he went to secondary market. Secondary market, all of you know that it's the stock market. Basically, there are two kinds of market. The first one is primary market. Primary market means directly you can get the money from the shareholders. So let's say TCS Limited in this company, whatever amount of this 400 crores directly received from the shareholders, that money would be considered as raised from the primary market, directly from the public. But when we speak that somebody is buying the money from the stock market or the stock exchange or the share market, then we can say he has bought it from the secondary market. Now analyze the entire situation here. Mr. Aditya wanted to buy these 10 lakhs rupees shares, but his application gets rejected. So he buys this money from the secondary market. Unfortunately, due to certain, the contingencies, let's say due to certain, I would say the bad performance of the company's shares price in the stock market goes down. So Mr. Aditya lost a lot of amount, and now the value of this 10 lakhs is only 7 lakhs. Only 7 lakhs. He was very much desperate. By anyhow, he wanted to cover the loss of 3 lakhs rupees. And then suddenly he gets the idea that prospectus of the company contains certain misstatements which are materially misstated. On that basis, Mr. Aditya files the complaint on TCS Limited that just because of the material misstatement in the prospectus, he relied on the prospectus and he bought the shares from the secondary market, and later on that information in the prospectus turned to be untrue or the false, and he lost 3 lakhs rupees there. It's the total loss caused to him, and that's why company is liable under section 35 civil liability. Section 35 civil liability. My question is that whether Aditya deserves to get this 3 lakhs rupees losses from the company or not under section 35. Now these kinds of questions they ask in exam. So what are the rules to claim the amount? Look, if some of you may be thinking, why is my problem kya hai? What's the problem in that? You invested by considering, the prospectus. Later on, your hope couldn't be fulfilled because of some materially misstated facts there. So technically, you deserve to get the amount from them. But the concept doesn't go like that. In this class, I want to give you one statement, one paragraph. And this paragraph actually contains, the details of, or rather I would say the conditions of the relief, that if you want to claim the relief under section 34 or 35, then what kinds of conditions you need to fulfill. So who can claim the relief over here? So what law says? Write down here. Law says that an allottee, okay, who relied upon the prospectus, subsequently turned to be materially misstated, or subsequently, you can write like subsequently discovered materially misstated, and suffered the loss on the subscription and files the suit within reasonable time, can claim the relief from company under section 34 to 36. Now look at each and every condition mentioned here. First condition, it says that you should be allottee. Now what do you mean by the concept of allottee? Simply speaking guys, allottee means the person to whom the shares have been allotted by the company. He is the person to whom the shares have been, or not only shares, let me tell you over here, he is the person to whom I would say the securities have been allotted by the company. Now our major emphasis here is on allotment. And allotment happens only if you apply in the primary market, through the primary market and not through the secondary market. So technically speaking guys, what does it mean? That anyone who buys the shares or the securities, including debenture of course, from the secondary stock market or the share market, then he does not deserve to apply any relief under section 34 or section 35. Okay, look, that also makes sense. Why? Because technically prospectus is issued for those people who are directly subscribing the securities from the company. Because when we buy from the share market, our contract is not directly from the company. In the stock market, trading actually happens between transferor and transferee. Company is not in the picture at all. And prospectus is always issued by considering the future applicants and not the shareholders who are already allotted the shares. And therefore, guys, the condition comes here is that only and only the person who applied by considering the prospectus directly to the company to get the shares allotted can apply for the relief in case if there is a loss. Okay, so I think all of you have understood the answer to this question now, that Mr. Aditya doesn't deserve to get any compensation for this 3 lakhs rupees loss. The reason is he didn't apply in primary market, he didn't apply directly to the company, and therefore company is not liable to him for whatever is written in our prospectus. All right. Not only allotting, if you are just allotting, but if you didn't refer the prospectus, then let's change the question now. What if Mr. Aditya, he's the allottee there, he applied to the company but didn't read any clause of the prospectus, then again guys you cannot claim the loss, because second condition here clearly written, it states that who relied upon the contents of prospectus. You read the prospectus, not only read but you also relied upon that, and that reliance proves to be wrong, false, then you can claim the losses, otherwise not. Okay. Third condition, it says that all those contents you relied in the prospectus discovered to be what? Materially misstated. Not only misstated, listen to my words, materially misstated. That means you have to prove into the court that you relied upon that misstatement. Because just now I have explained that materiality concept, varies person to person. For you it may be material, maybe it's not for me. For example, there is a wrong information about the directors in the prospectus, but while applying to the company, I didn't read that. And even I was not concerned about the director's detail while making the decisions of my investment. And later on, it is proved that that director details is falsely stated. Can I claim the relief over here? Answer is no. Why? Mere misstatement will not make the allottee to claim the compensation. He must have to rely upon material misstatement. So what are those three conditions? First of all, you should be allotted. Directly you should have to apply from primary market, directly from the company. Second is you read the prospectus and then you go. Look, sometimes the question may be like this, that you didn't read the prospectus. Your friend told you that this is good security to buy, invest here. So by getting influenced from your friend, you invested. You didn't analyze properly that what's the security and how it goes. Then guys, this relief is not available in that case. Okay. Fourth condition says that you must have suffered the loss because of that. Look, just now I have explained what do you mean by section 35 civil liability. Civil liability means whatever damage caused to you, you can claim from the company. So it is quite obvious to understand that if you do not have incurred any losses, if you don't have incurred any losses, then your total damage is zero. And if it is zero, then again guys, you cannot claim your losses. Even if you know that the matters what you really relied upon are materially misstated, but even revealing of that factor doesn't change the market value of the stock market, the valuation is still intact, then you can't claim the relief in this. Now, the last point I would like to clear that once you come to know about your losses and once you come to know about your material misstatement reliance, immediately within reasonable time you have to file the suit against the company. Yeah, you understand that misstatement was actually stated 20 years back. You knew that fact, and after 20 years, just to take the revenge from the company, now you're filing the suit against the company. Is it really reasonable? Answer is no. You must have to take the legal action within reasonable time. And in fact, I want to say that this reasonable word is not defined anywhere in the law, just like the word materiality. This concept is also what? Subjective, situation to situation, circumstances to circumstances. This meaning changes. All right. So these all are the conditions if you wanted to apply for the relief in case of material misstatement in the prospectus. So students, this was the concept of material misstatement. And now I think only the last concept in this entire prospectus discussion is pending to be discussed, and that one is, yeah, as you can check it here, that one is section 38. Yeah, this one, fictitious name. Fictitious name. Let me tell you, Bacha, that law is very much strict towards insider trading and shares allotment or share transfer in fictitious name kinds of transactions. Law never ever tolerates that company securities should be issued to someone who is ghost, who is not really existing in this world, or who has not given the consent to get the shares. Look, if this provision is not there, first of all, what a section 38 says that if company transfers shares in fictitious name, that means in the ghost's name, really who is not available on this planet, who is not existing on this planet, or any applicant applies in fictitious name, then company officers who are intentionally, purposefully allotting the shares, and all those applicants who are purposefully applying the securities in fictitious name would be liable to hold the punishment as mentioned under section 447. Just now, you know, guys, what section 447 says: maximum up to 10 years imprisonment, right? Why law has introduced section 38? क्यों इसको बनाया क्यों गया? Okay, let me just give you two incidents here. First of all, you all know that according to the SEBI rules and SEBI guidelines, company must have to achieve 90% of the subscription. And if this 90% couldn't be achieved, then entire money what is collected by the company must have to be refunded back. ये बात है. What if company has just collected 85% and not complete 90%, including all the underwritings and everything? Max to max company could have gone till 85%. पूरा गया ही नहीं. तो अब क्या करोगे? So sometimes what company can do is company can pass just one fake entry. What kind of fake entry? Just like, let's say, cash account debit to shareholders account, and remaining 5% they can fill by passing this fake entries. Now, if my dear students in future, let's say some investigating officers is asking you that who are those shareholders who holds your 5%, then in that case company may create some fake entities there, fake entities to show this 5% justification, who are not actually existing but fake entities. So look at over here, law clearly says that you have to establish 90% to enjoy the money of the subscription, but आपने तो achieve ही नहीं किया था, you could achieve just 85%. How can law allow you to enjoy the money? So this, in order to avoid this kinds of fake entries in the books of accounts, precisely, law has come up with the provisions like section 38 that it cannot tolerate any allotment of the securities in fictitious name. Actually, it is deserved to be there for the genuine members, genuine applicants, and not for any ghost-like entities. All right. Second example, where it is from the the applicant side. Uh, Understand that if there is some good companies coming up with the public invitation, let's take the name like LIC, highly supported by the government, and the future is very bright. It has a lot of reserve surplus, so everyone wants to apply in this security and wants to get the chance to have the shares subscribed. But you know what, if this is a good company, not only you but just like you, a lot of other people are also applying there. And if many people are applying to such scripts, there are high chances to get your application rejected. It's possible that your application may get rejected. In that situation, applicant will try very hard to apply the shares in all the relatives' name, brother, sister, wife, children, every. And still, guys, you do not have the enough number of names, then you may create the fake entities, fictitious names, and you may apply. Look, more people are applying along with the fictitious names. That means there is a high probability that any one of them or few of them may get selected for the securities, and you may earn that high amount of fluctuations of the stock market. So again, guys, this is crime from the shareholders part or the applicants part, and section 38 literally prohibits the persons from doing this. वो allowed नहीं है, वो बिल्कुल allowed नहीं है. ठीक है? So guys, that's all about the prospectus chapter, what I wanted to discuss. Just go through all the topics, and after this, go through all the available questions which are there in the the last few pages of your ICAI study material, and try to make yourself confident that after learning these sessions, if those kinds of questions they are asking in exam, then will you be able to answer them or not? Okay, thank you. All right, students. So welcome back again, and after learning this beautiful chapter prospectus, now we are moving to the another very interesting and one of the lengthiest chapters of CA Inter exam, and that one is general meeting. General meeting. All the students who are referring to ICI's study material, I would like to tell them that general meeting chapter is considered as management and administration. Sometimes while teaching, I have faced this query that it is identified as what, it is actually considered as what. So do not get confused. It is general meeting, management, and administration. So, are you doubt what contents we are going to learn in this? So the first one, what we have, it is the types of meetings precisely. What are the types of meetings? That concept we are going to learn first. After then, the second question we are going to face with it is types of general meetings. Okay. Third concept we are moving towards that requirements to conduct a valid general meeting, and we are going to solve these three important aspects there. The first one what we have, it's properly convened. Second we have, it is speaking about properly constituted, and the third one we have, it speaks about properly conducted. So these three important tasks we have to learn about here. Okay. Still we have a lot of other miscellaneous points, about a lot of points we have to face with in this. For example, we are going to talk about the types of votes. After then, types of resolution. After then, types of businesses to be transacted at general meeting, and so many the concepts like section 111, if you just look at that, speaks about circulation of members, resolution. All right. After then, few concepts like proxy and representatives. Okay, precisely it is given in the sections 105, 112, and 113. So proxy is actually given under section 112 and 113. Sorry, 105. Representatives are given in 112 and 113. Again, I want to repeat. Proxy is provided under section 105. Representatives are provided under section 112 and 113. So technically, these 2 points are there. Now, so many other topics are there. I would say your miscellaneous, and in the miscellaneous, minute books is there, section 115 is there, a lot of things we are going to learn. So technically, this is what we have in our syllabus. General meeting. Precisely, it is considered as management and administration. Management and administration. Okay. So let's start with the first point, types of meetings. Now, what do you mean by types of meetings? So technically, when I speak about types of meetings, we have so many types. The first one we have shareholders meeting. Then we have directors meeting. After then we have committee meeting. We have debenture holders meeting. We have creditors meeting, and so on. We have so many types of meeting going on. Shareholders meeting, directors meeting, committee meeting, debenture holders meeting, creditor meetings, and so many. Out of all, when we speak about shareholders meeting here, shareholders meeting is technically considered as general meeting. Shareholders meeting is considered as what? General meeting. And directors meeting is known as or considered as board meeting. Is considered as board meeting, or some of them, like some of the students do uh, consider this as the board of directors meeting. So both concepts are same. We use these two words interchangeably. Sometimes we call it as a board meeting, sometimes we call it as a general meeting. All right. So committee, look now, out of all these, whether I speak about shareholders, directors, committee, debenture holders meeting, and the creditors meeting, and so many all, in our C inter, our major focus will be in the shareholders meeting. Board meeting or the directors meeting, we people are going to face at a CA final level, section 149 onwards, the chapter of director, a lot of concepts we are going to face there. Committee meeting, again, we are going to face under the board meeting chapter in CA final, not here. Debenture holders meeting, it's just a formal in our CA inter, we have the concept of debenture, but we have a very little to discuss about a debenture holders meeting. Creditors meeting, we are not going to face any where except in the chapter of winding up or while studying the section 66, which speaks about capital reduction concepts. All right, so these all are the types of meetings. Now, so let's begin our C inter part, C inter syllabus, and that one is shareholders meeting here, shareholder meeting. The first question comes like, what do you mean by shareholders meeting or general meeting? Or okay, so answer is quite easy. When the members of the company, when the shareholders of the company are invited by the company to discuss certain significant matters of the company, we consider that meeting as shareholders meeting, general meeting. How much is shareholder meeting? Now, what are the types of general meeting? Now, let's understand about that. So, types of general meeting. So, technically, in our syllabus, we have these three kinds of types of shareholders meeting. The first one is annual general meeting. Uh, in short form, it's known as AGM. After that, another concept we have, it is EGM, which is known as extraordinary general meeting. And the third one, what we have, it is the class meeting, which is known as CM. Okay. Now, technically speaking, here AGM stands for what? It is compulsory to be conducted once in a year. Alright, compulsory to be conducted once in a year. That's the first part. Our extraordinary general meeting generally we conduct when we have certain emergency to be conducted or emergency to happen. So it's generally we call it or the company calls it when there is some emergency. Class meeting. This is the new concept introduced in the Compulsory 2013. In the Compulsory 1956, this concept was not available. Technically, we can speak it as like just one of the extension part of the extraordinary general meeting. So when we can call here, generally when we call the class meeting. Look, class means what here? First of all, class means suppose equity shareholder is one class, preference shareholders is the second class. Even in the preference shareholders, we can have the other categories like cumulative preference shares or the non-cumulative. Then we can say redeemable preference shares. Then participating, non-participating. There are so many classes. So sometimes when company needs to call equity shareholders, it doesn't make sense that it should call the preference shareholders. अरे भाई जब जरूरत इक्विटी शेयर होल्डर्स की है तो प्रेफरेंस शेयर होल्डर्स को बुला के क्या करेंगे? And when we want to discuss certain matters about the preference shareholders, then obviously it's quite obvious that we should not call equity shareholders. So wherever we are calling just one class, one particular class, and we are not calling all the members, then this kinds of meeting is known as class meeting. Alright. So only shareholders belongs to the class are invited. Only the shareholders belongs to that particular class are invited. Generally, when I discuss this concept, the students have this doubt that what do we mean by members here? Suppose today if I want to give you the options that members means what? Are they only equity shareholders? Does it include the concept of preference shareholders or not? So whenever we speak about equity shareholders or the preference shareholders, can we consider them as members or not? So please understand that members do not mean only equity shareholders. It also includes preference shareholders as well. Why? You see, just like the equity shareholders, they are also capital contributors. And if they are capital contributors, obviously they do enjoy all the rights just like the equity shareholders, except dividend and redemption. And obviously that at the time of liquidation, during the winding up, these people get the first chance or the first preference to get their capital back over equity shareholders. So that's the difference. But obviously, members includes equity shareholders as well as preference shareholders. All right. So this is what I would say the basic classification of the types of general meeting here. Now, before I start the other concepts as here we have mentioned, let's understand a few questions about annual general meeting now. Annual general. So technically, annual general meeting is defined under section 96 of the Companies Act. Companies Act 2013, section 96 of the Companies Act 2013. Now section 96 technically is actually categorized into the two parts. Section 96 subsection 1 and of course 96 subsection 2. So, sorry. Now, what do you mean by 96 subsection 1 and 96 subsection 2? What are the differences? 96 subsection 1 deals with first AGM, Whereas 96 subsection 2 deals with, I would say, subsequent annual general meetings. Subsequent. Now, what do we mean by uh, first AGMs? All those annual general meetings, other than, I would say, other than, I'd like to take it this way. What do you mean by subsequent annual general meetings? So, all the meetings other than the first AGM is called subsequent AGM. So, first of all, this first AGM will happen, and then after then, whatever all the annual general meetings are happening, that's nothing but subsequent AGMs. Okay. Now, what kinds of questions we can expect in our exam out of these two concepts? Like, okay, so let's take it this way. First of all, they may ask like this, that there is a company, you can take it like ABC Limited, suppose, and this company's date of incorporation is somewhere around, you can take it like suppose 1st November 2022, and the question is like, what is the last date on or before which the first AGM of the company shall be conducted. So this is the question. So only one information, only one hint, one data is given, that date of incorporation is the 1st November 2022. So what shall be the last date on or before which the first annual general meeting should be concluded, should be completed. So whenever we just understand, the section 96 subsection 1, now let me just tell you what is written under section 96 of the Companies Act 2013. Alright. So whenever we study about section 96 of the Companies Act 2013, look at the contents here about the first annual general meeting. Alright. Okay, these are the contents here. So it is written that in case of the first annual general meeting, it shall be held within a period of 9 months. This is very interesting. Okay, so it's provided that the first annual general meeting shall be. May I speak about the first AGM? Oh, just a second. थोड़ा इसको और बढ़ा देते हैं. हाँ, ये ज़्यादा सही है. Okay. So first AGM shall be conducted within 9 months. Yeah, 9 months. So look, generally what students are understanding, it is written as a within 9 months. So how do they make the calculation? So they take first of all the base date here, 1st November 2022. That's the date of incorporation is provided, and they're trying to add 9 months over there. They're trying to add 9 months. So if you add 9 months on 1st November 2022, its answer comes is 1st August 2023. This is what the answer students are writing, that okay, fine, the first annual general meeting of the company should have been conducted on or before 1st August 2023. But you know what, sometimes while we read, if we just collect this much data from our reading, then lot of other things we may miss there. How come? You read बच्चा, what is written here, पूरा आप sentence पढ़िए. It is written that in case of first annual general meeting, it shall be held within a period of 9 months. Agree, but from where? That we have to understand. So it is mentioned that from the date of closing the first financial year. So we have to see that what do we mean by first financial year. So look at, now calculation changes. If I consider the 1st November 2022 as my base date, suppose, alright, as my base date, then my first financial year for this date is coming to end by 31st March 2023. So this is what the date would come when for this date, इस तारीख को, इस डेट को our just a second, let me have some good green color here. एक अच्छे से green color देते हैं. Hold on. Yeah, that's awesome. 31st March 2023. That is the financial year end for this date. And now add 9 months here. Now add 9 months here. So if you add 9 months here, the answer comes like it is 31st December 2023. So 31st December 2023. This is the last date on or before which company has to complete its first annual general meeting. Okay, so please do not get confused here that how to calculate. Again, we just go with this entire example again, that these kinds of questions we are facing in our exam, and how to go about this. Now, this question can add a lot of trick. It can be a more complex when instead of 1st November 2022, the date is suppose 1st January 2023. Now here the answer is little bit tricky. Now many of you may be thinking that what's the wrong in that? Answer is quite easy. Why? 1st January 2023, the year end comes to what? Again, if for the 1st November 2022, it is 31st March 2023. So for January 23, the next financial year end would be what? 31st March 2023. That's what most of the people are thinking here. उसका भी तो 31st March ही तो होगा. And after having this 31st March, add just 9 months, and once you add 9 months, you will definitely get a 31st December 2023. This is how the students are thinking. But let me be very clear, when I put any date which is 1st January or onwards, then calculation changes. How come? Please refer section 2 subsection 41 here. Okay, now what do you mean by section 2 subsection 41? So if you come to here, look at it's clearly mentioned here the first financial year, and section 2 subsection 41 of the Companies Act provides the definition of financial year. And just because of this definition of the financial year, the entire answer changes here. Why? You read it. What is the actually definition of the first financial year or financial year? It is written that in relation to any company or body corporate, the financial year means the period ending on the 31st day of March every year. So whenever your day financial year ending as on 31st March, it is the financial year for the companies. So look, technically speaking, beginning year is not mentioned. Beginning year is not mentioned. Why? Beginning year can be your date of incorporation. So as you can check it here, that if my company is incorporated as on 1st November 2022, then my financial year would be from 1st November 2022 to 31st March 2023. This would be. But this proviso you understand, right? This point makes the difference. क्या लिखा है यहाँ पे देखिए? And where it has been incorporated on or after the first day of January. This is very interesting. That if it is incorporated on or after the first day of January of a year, then the period ending on the 31st day of the March of the following year, in respect of whereof the financial statement of the company or body corporate is made up. So this word following year shall be considered 31st March of the following year. Following year means what? The next year will be considered when company is incorporated. This term is also very important. When company has been incorporated on or after first day of January. So look at here in this and question. Company has been incorporated for 1st January 2023. That means existing financial year will not be the financial year end, but it is written that following year. Following means what? The next year will be considered as the financial year end. So let me tell you बच्चों, for the 1st January 2023, this is the real financial year end, but वो नहीं लेना है. Next financial year, That means one more year you have to add here. So answer would come to 2024. I hope it's clear. Answer comes as 2024. And over there then you have to add 9 months. And once you add 9 months, answer would be 31st December 2024. By the way, this level of question, I don't think so that they would consider, but fine, as being the students, we should not take a chance. Almost all the kinds of questions should be clear while we proceed for examination. I hope this point is clear in everyone's mind, all these two questions precisely. Okay, Bacha. So again, I want to tell you, Bacha, if just any day before 1st January is given, take the next upcoming financial year and then 9 months you have to add. But wherever any date is 1st January or onwards is written in exam, then don't take the immediately March ending, but take the March ending of the next year. And this is how the things would be considered. So that was the entire discussion of section 96 subsection 1. Okay. Okay, so now we are moving towards section 96 subsection 2. Now what it is trying to say, subsequent annual general meetings. Just like the first part, what kind of questions we may expect? The question goes like this. Suppose it's written that date of previous annual general meeting for suppose one company here, name is Infosys Limited. You can take it as a 28th September 2020. And here the question comes like, what shall be the date for the next AGM? What shall be the last date? I think that will be the correct part. What shall be the last date for the next annual general meeting? This one is the question. So in the question, what they have provided the date of last general meeting, annual general meeting precisely. It was 28th August 2022. So what shall be the last date for the next annual general meeting? Now, sometimes when we see these kinds of questions, we may get confused and we may start believing that, okay, they should have certain problem in the question because only one hint is given and that's the date of last AGM. This is not a question. How can anyone answer the question like this? But let me tell you, Bachcha, there is nothing wrong in this question. It is perfectly written. कुछ भी गलत नहीं है यहाँ पे. जो होना चाहिए, जिस तरीके से होना चाहिए, everything is perfectly fine. Okay. So now, how to solve this question? First of all, you see, already hint is given. It is of the this date belongs to previous annual general meeting. That means general meeting already been conducted in the last year. So this is not the question of the first AGM. This is about the subsequent AGM, the next AGM. पहला AGM का question नहीं है because already it is written that date of previous AGM is this. So it's not a question of first AGM. Now when we refer section 96 subsection 2 and the entire 96, we come to know that for the subsequent AGM, there are these three conditions needs to be complied by. Alright, so let me put it this way. Subsequent AGM. Alright, subsequent AGM. We need to comply these three kinds of conditions. And the conditions goes like this. The first condition, what it tries to say is, the first condition, it says that it should have been conducted once in a calendar year. It must have to be completed once in a calendar year. Second condition says that it should be completed within 6 months from the financial year end. That's the second condition. And third condition says that gap between two AGMs shall not exceed 15 months. And these three conditions are concurrent in nature. Now, what do you mean by here the term called concurrent? Concurrent means simultaneous. It's not like that first of all you have to comply the first one or the second one or the third one. No, it's not like that. It is concurrent. Concurrent stands for all these three needs to comply by simultaneously. 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 That means they are concurrent. These as well as these as well as this. All these three conditions need to get complied by. Okay. So now based upon this formula, now try to solve this question. Okay. Just pause the video and try to solve, and just let me know that whether your answer is as per my calculation or not. So 28th August 2022, it was the date of last annual general meeting. That means in the year of 2020, according to the first condition, in the first 2022, for this year, annual general meeting has already been conducted. Annual general meeting has already been conducted. That means that now we are considering about 2023. We are not now talking about 2022. It is already conducted. So now we are thinking about 2023. This is the next calendar year. Now for 2023, you just suggest me the last date on or before which meeting should have been completed, and that is coming to 31st December 2023. Technically, that is 31st December 2023. Okay. So we have found the option number A here. This is my option number A. Okay. Once in the calendar year. So again, I want to repeat, guys, for the 2022, my meeting has already been completed. So now this is the turn to go for 2023. And for the 2023, the last date is coming is what? 31st December 2023. Okay. Now let's try to apply the second condition. Second condition is trying to say that within 6 months from the financial year end. So if 20th August 2022 is my base date, so for this date, you tell me what shall be my financial year end. So obviously for this, if this is my base date here, as you can check it. Okay. So if this is my base date for this, my financial year end will be 31st March 2023. This is what is going to be my financial year end technically. And if this is my financial year end, I have to implement technically 6 months there. So the moment when I apply 6 months over there, okay, the new date will be here 30th September 2023. 30th September 2023. So this is my option number B. Alright, this was my option number A. This is now my option number B. You just keep on noting it down that how things are going there. This is my option number B. Yeah. Now, third condition states that the gap between the two annual general meetings shall not exceed 15 months. Okay. So how to calculate this? Look at 20th August 2022. If I add 12 months here, okay, if I add 12 months here, then 12 months will make it to go to 20th August 2023. Of course, and then I will add more 3 months here. So as soon as I enter 3 months here, that is coming to what? So August plus 3, so September, October, November. So new date what's coming here is 20th. Again I want to repeat that. September, October, November. So 20th November 2023. That's going to be the new date here, as you can check it. So this is my condition number C. Alright. So technically now the question arises is, at where you can see all these three conditions are getting satisfied. So lawfully, earliest of all these three, earliest means whichever is earlier will satisfy all these three my conditions. So 31st December 2023, 30th September 2023, and 20th 11 2023. Out of these three guys, this date, out of this date is satisfying, I would say, all of my conditions, and therefore the answer for this question would be the 30th September 2023. So on or before which the meeting should have been completed. Okay, this is how you should make the calculation here. Now sometimes in exam they also ask that what if company could not complete annual general meeting on or before 30th September 2023. Could not, due to somehow 30th September 2023. Somehow it couldn't do that. Then what option is available? Technically, when you do not complete your annual general meeting as per the date what we have calculated, then you may have to pay the penalty according to what is provided under section 96. But due to certain genuine reason, I would say, due to certain genuine reason, what if you couldn't have completed this? तो फिर आप क्या करोगे? So law has provided in that case. Okay, so I would like to put a note here. Please write it down. Okay, note is going like this. Okay, note for this subsequent page here. In case when company couldn't conduct the meeting within the time limit as provided under section 96, company may request the central government. Yeah, that's what the point is. Company may appeal, company may request the central government to grant the extension. So that's the note number 1. Obviously, company may apply for extension. So sometimes if there is a question in your MCQ that can company pray for extension or not? Absolutely yes. Now second question comes that central government obviously is empowered to grant the extension, but max to max how much it can give. So write on the second note. It's to be noted that central government may grant the extension for the period not more than 3 months. So max to max what a central government may grant is just the 3 months. It cannot go beyond this, provided company has given the reasonable grounds. Alright, so once extension is granted, then it's quite obvious that if you have conducted the meeting within that extension period, then law will not consider this as the non-compliance of section 96, and it would consider this as if like you have comply the provision within the lawful point. So this was all about the annual general meeting, and as being, I would say, the CA into students, you are also learning that what level of questions we may expect in exam. So that is all about section 96, and rather I would say the annual general meeting part. In the first AGM, again I want to repeat, please do not forget that in case of the date of incorporation is 1st January onwards, then the answer will change, because according to section 2 subsection 41, 1st January onwards, that means all those 3 months we are taking, that would be the part of the existing financial year. So don't forget. All right. So once you have पढ़ लिया कि how to calculate this, so now we are moving towards the other concept, and that is like requirements to conduct a valid general meeting. So as we can check it up here, that we have this three kinds of requirements. As you can check it, that the first one is meeting should have been properly convened. Second is it must have been properly constituted, and the third one is it must have been properly conducted. So we have these three conditions to be fulfilled when we can say that okay, a meeting is lawfully valid. The one question comes like, okay, what if the meeting is not convened as per the rules and the provisions as provided here? So see, first of all, you just take an example of a listed company. When it calls up one general meeting, it expends a lot of money. Sometimes the expenses goes around crores and crores of rupees. And what if later on it is detected and proved in the court that some of the rules and regulations what needed to be complied compulsory are not done with? Then court may make all the decisions. Court may order that all the decisions which had been taken in this general meeting would be considered as null and void. Just imagine you spent crores of rupees, you invited a lot of people, you presented the proposal, voting, majority of these shareholders voted in the favor of motion, and then matter goes to the court, and court says that just because few provisions of the law hadn't been complied by the company, all the decisions taken place there are null and void. How does it feel? Huh? So general meeting chapters should be studied with the proper care, because it's the part of corporate politics. Obviously, any opposition directors or opposition side shareholder doesn't want that you should pass certain decisions, and that's why he would always try to stop you by taking any means, साम दाम दंड भेद कैसे भी करके आपको रोकना चाहेगा ही चाहेगा. So study of this general meeting may be one of the very good tools, where if they prove that few of the provisions are not complied by the company, and therefore these decisions are not valid, then just imagine your all expenses would be going in vain only. Okay, so these three main important conditions we have to comply by. It should have been properly convened, properly constituted, and properly conducted. That means whenever the allegations are raised that meeting was not proper, companies' advocates would always try to prove that it was properly convened, properly constituted, and the last one is properly conducted. Okay. So now let's study the conditions of the properly convened. When we can say that it was properly convened. So again we have for this properly convened, I would say the two important conditions to be complied by. So wherever we see these three conditions are complied, sorry, these two conditions complied here, we can say that meeting was properly convened. Meeting was properly convened. All right. So what are those two conditions? Okay, the first one is, yes, go make it a little bit. Yeah, like this. First one is it must have been called up by valid authority. That's the first condition. It must have been called up by valid authority. And second condition over here is proper invitation to be sent to members. Proper and valid invitation to be sent to members. Now, in the Companies Act 2013, while we study the rules of management and administration, they have provided that who is the valid authority and what should be the conditions whenever it's called up by them, and under what circumstances we can say that invitation to the members was valid. It's quite obvious that, let's say, you want to call the meeting after 2 days and you are sending and dispatching invitations today. It doesn't make reasonable. The reason is shareholders are not getting the proper time to think about that whether they should attend the general meeting or not, and if they plan to attend, then what to vote. They should favor the motion or they should go against the motion. So the proper time must have to be given. In the invitation part, we are also going to learn that what should be the contents of the meeting and before how many days we should dispatch this, and what should be the attachment to whom it should be given, by using what modes we can give. That's a lot of questions. Lot of questions. Okay. Now let's discuss about called up by valid authority. That part. So called up by valid authority, what do you mean by this? What do you mean by this? So technically, when we speak about the authority, who are the authorities? So law has provided three authorities here. Oh, sorry. Just a second. Okay. I'm saying three authorities. And the first one is, any guesses? The first authority, what is covered by the law, is the board of directors. Board of directors. So if meeting is called up by board of directors, then law considers this as the valid one. Okay. Now, apart from board of directors, the second authority is also there, and that is the shareholders, or you can just call them as the members as of now. Okay. Meeting called up by shareholders is also valid. And the third authority which is prescribed over here, it is meeting called up by tribunal. Meeting called up by tribunal. These three authorities we have here. Three prescribed authorities. First one, what if it's called up by board of directors? Second is, what if it is called up by, I would say, shareholders? And third one is by, of course, tribunal. So these 3 points we have. Now further, tribunal is categorized into two parts here. Meeting called up under section 97 and meeting called up under section 98. Meeting called up under section 97 and called up under section 98. Okay. Before we discuss, okay, fine. So what's the difference between 97 and 98? Maybe you want to know about this too. So section 97 deals with the tribunal's power regarding AGM with respect to annual general meeting. And when I speak about section 98, then it is about extraordinary general meeting. That means EG. Extraordinary general meeting. So one is section 97 annual general meeting and other one is section 98 extraordinary general meeting. So these three authorities are there. Okay. Invitation part I will discuss, but not as of now. Let me complete the authority part first. Okay. Now, what kind of questions we may expect in exam with respect to this point? Properly conveyed, properly planned, I would say. This convention part should be completed before meeting actually starts. So this is about the planning. Okay, authority should be valid, invitation should be valid, and then you can just begin discussions in the meeting. Okay. Now let's discuss about this part first of all. Board of Directors powers to call the general meeting. Now before I start, please remember that I am talking about the general meeting. I am not talking about only annual general meeting. That means that whatever we are discussing here, that just do not apply to annual general meeting, but if company is calling any extraordinary general meeting, the rules would apply as it is, unconditionally. As it is, it will apply. Okay. So the first one is board of directors. Board of directors. So let's discuss about that. Meeting is called by board of directors. You see, the question goes like this: what if there is a company you take it like the XYZ Limited, suppose, and this company wants to call its 45th annual general meeting. Okay, sometimes in exam instead of AGM they may put extraordinary general meeting as well, but don't get confused because of that. So 45th annual general meeting company wants to call up, and for that one director, let's say Mr. Ajay, a director of the company, issues invites in the sense like, look, all the invites for the general meeting generally gets invited through notices. So whenever the word invites is mentioned over there, we have to understand that these are nothing but what? Invitations or the notices. So in this company wanted to call the 45th AGM. Mr. Ajay, a director, but very much dominating director. Just like when I speak about the Reliance Industries Limited, the man who is, I would say, has a lot of tremendous power and a lot of respect is Mr. Mukesh Ambani, of course. The same way in Tata, there was Shri Ratan Tata, and so on. They have maintained the legacy. So same position here, Mr. Ajay has. Okay, uh, on invites shareholders attended the general meeting and voted. So many shareholders just came there to show the presence. Not only to that, but they voted on few motions and made those decisions to passed. Now, certain dissenting certain dissenting shareholders raised the objections, raised the objection against the decision, and this is only the question that examine the validity of the decisions passed at annual general meeting. That's only the question. Look at. So there was a company, Mr. Ajay, a director, issues the invites to shareholders on his invitation. A lot of, like, many shareholders came, attended. Not only to that, on that motion, they just voted and certain decisions passed. But every large organization has always two parties, the ruling party and the opposition party. So few members who did not vote in that matter said that these decisions are invalid and matter, let's say, escalated to court or the tribunal. And that's the question, that whether these decisions are valid or not valid. So by reading the question, students may think like this, that what's the wrong in that? Why everything is going perfectly fine? Meeting was called up and voting happened according to the law. People got together at the place and they voted. So what's the wrong in that? Let me tell you in this question, what's wrong is this. this. This is the main hint in the question. How come? If you read the provision very much carefully here, then who can call up the general meeting? So answer comes like board of directors can call. And let me tell you what, just one single person who is director in the company cannot be considered as the board. Because whenever we see the definition of the board of directors while we refer to section 149 at CA final, it's clearly provided that board of directors is the group of directors, collection of directors. It is the gathering of directors. One single person cannot be considered as the board. Alright. So what makes the difference? You see, individual director doesn't have right to call the general meeting. He doesn't have the power. Board of directors has the right to call the power. And I know that most of you are thinking, what is the difference, sir? Both are same. ना same नहीं है भाई, वो समझो सबसे पहले. Board of directors how takes the decision and individual how takes the decisions. Let me tell you what's the democratic way in the company to get the things decided by board of directors. Let's say if company wants to get few things decided through the board, first of all they will company will invite the directors to the board meeting. Company secretary will arrange the board meeting and all the directors will be invited. For your kind information, board meeting may be attended through video conference as well. So all those directors who are unable to attend the board meeting through physical presence, they may attend through what? They may attend through video conference as well. And over there, this proposal will be raised that what should be the date of the next annual general meeting. Alright. And they will discuss the matter there. And once the matter is discussed there, they will propose the votings. And in that voting, if the majority of the directors agree to the motion, we can say that this decision is taken by the board of directors. And in technically, I can say that decision is passed by board resolution. Yeah, that's what word. I think in CA Foundation you must have heard about ordinary resolution and special resolution. Here it is board resolution. And once the board resolution is officially passed and recorded, we can say that this decision is passed by board of directors. Okay, so that's what goes wrong here. Here the meeting was called up by a director and not by the board. So in the absence of that records, we can say this calling up itself is against just one of the conditions of the Companies Act 2013, and therefore all the decisions which are taken over there are not valid. The reason is when invitation was not proper, authority was not proper, then we can say that meeting is also not proper. One of the conditions to get the valid general meeting is not satisfied. Okay. Now that is the basic answer of the question what I raised. What if the meeting is called up by Mr. Ajay, one of the directors, under what circumstances I can say that still the meeting is valid? Still this calling is valid. I know what you're thinking, sir. Just now you have said it's not valid. Then how come it be valid? Look, in the law always there is a possibility. Please try to be optimistic, okay? Always there is a possibility. Just think that how we can treat this point as validly complied point. ठीक है? तो उसको हम कैसे करेंगे? Okay, so look at now what is written over here. It's written that meeting is called by Mr. Ajay, a director. And the second point, if you read the provision, it's written that board of director is the valid authority. So whenever I speak about the board of director, what do you mean by this? It simply means that board must have to give the consent. Board must have to give what? The consent. बोर्ड को कंसेंट देना पड़ेगा. बोर्ड को कंसेंट देना पड़ेगा. But nowhere it is mentioned that when this consent should be taken, before the invitation or after the invitation. Law is silent on this. That means that consent may be taken even after distributing the invitations. So here, if Mr. Ajay invites the public to gather in a general meeting, this decision of Mr. Ajay would be valid if subsequently this decision is rectified by him. Look at the word, it's not a rectified, it's a ratified. And ratified means if later on it is subsequently approved by the board, then this decision will be considered as valid. So later stage this needs to get approved by the board. बाद में इसको board से approve करवाना है. And board says fine, you have called, by the way it was called for the sake of company, so we will allow this. And if it is allowed and board resolution is passed even after distributing invites, company law allows this decision, and then this objection can be nullified. Okay, so these kinds of micro levels observations and analysis you have to keep in your mind while we are doing what I would say the general meeting questions. Please try to be more observant, as I'm telling the students it's no more now CA foundation, it's a CA inter. You have to be, I would say, more awakened, and you have to go with. All right.